Good afternoon, everybody, and welcome to TradeStation. This is Michael Burke. I head up client trading here at TradeStation, and welcome to another edition of our Trading App Store Showcase. Today, we've got Steve Dahl with us, who's going to talk about Market Profile and his great tool, Market Map, and we'll get to Steve in just 1 minute. Keep in mind that the following presentation is for educational purposes only. All of the symbols and trading ideas discussed by the instructor are for demonstration purposes and are not recommendations. Active trading is not suitable for everybody. Options trading, doubly so. Take a look at the disclosure information that I'm pushing into the chat, and you can find additional disclosure information on the TradeStation website. So we have Masterclass coming up in June. This is a abbreviated 3-day deep dive into the platform. If you have an opportunity to come in and learn more about TradeStation, this is a great way to do it. We have lots of fun speakers during those 3 days, lots of fun events, and it's just a great way to interact with all of us here at TradeStation and learn more about the platform. So if you're free those days, learn more about Masterclass. So today's presenter is Steve Dahl, and Stephen is an expert in market profile. He's created a great tool around market profile called Market Map, and it's always great to have Steve with us. So Steve, I'm going to turn it over to you. It's all yours.
Wonderful. Thanks for having me. Special thanks to, of course, both Jim, Mike, and the entire TradeStation team. A little bit about my history with TradeStation. We're thrilled to call TradeStation an over decade partner of us here at TAS Market Profile. Our tools have been readily available and very popular amongst current TradeStation users. Those of you that are TradeStation users, which is hopefully every one of you here, are using the platform and finding our tools. I'm president of TAS Market Profile. I'm also a nearly 2-decade veteran in the trading industry. I'm going to move along in my slides here so we can get you up to speed on some basic education. I too also have a risk disclaimer. The Cliff Notes version is that there's a risk of loss associated with trading. Please trade responsibly and make sure that your trading activities are suitable for your financial situation. Anything you see here, of course, is for educational purposes only, and I'll give you just a few moments to finish reading the rest of that disclaimer. Okay, it's important to realize that TAS Market Profile is the official brand of TAS Market Profile. When you're looking for market profiling tools that bear the TAS name, you want to come to TAS Market Profile. We do have 3 core flagship products. The one I'm going to be showing you is in our indicators suite, and you'll see that pictured on the left. We also do have some standalone software tools that help in scanning S&P, what we call market internals, in a product called the Edge, as well as a market profile based scanner called the TAS Profile Scanner, the world's only market profile based scanner based in TAS Logic. Let's talk a little bit about where you can get your hands on our 100% free TAS Market Map. Thousands of TradeStation users are already using the TAS Market Map, and you can too by simply coming over to the TradeStation Trading App Store and type in the search window up above, TAS Market Profile. You'll find that we have 2 products up there. The first one, of course, is the TAS Market Profile Market Map. You can see a whole bunch of 5-star reviews, and I believe, maybe with the exception of one, predominantly 5-star reviews, and I think we've earned it. We're the #1 free market profile indicator provider, and you can see that. Simply click the install button, and if you're a TradeStation user, it'll be readily available to you without delay. We also do have a 7 indicator suite that provides some additional analytics, which we call the TAS Market Profile Immersion membership. We encourage you to check that out. There is a free trial available for that, and it runs a very reasonable price at $197 a month if you're inclined to check it out. Down at the bottom, you'll see that we do offer a free market profile course for anybody that uses the TAS Market Profile in the TradeStation App Store and on your charts, and give us a review. Of course, we want your honest feedback, so please do post a review and you'll qualify for our free market profile course. One thing that's important to know, although I'm coming to you from my satellite office here in suburban Chicago, is that TAS Market Profile is used by industry professionals. You may have seen us on Bloomberg. Since 2011, we've been supporting bank traders, hedge funds, advisors, prop traders, and brokers all over the world. That is an image of us out in the Bloomberg Hong Kong office some time ago, and you can see a very attentive group of professional traders eager to learn the very same method and tools that I'm going to be introducing you to today. We also do empower traders just like you. That's important to realize. Before I go too much further, I want to make sure everybody can see the slides. Is that correct? Is everyone seeing the slides? But I don't want to get too far along. Okay, good. All right. Thank you. I appreciate that. You gotta love live webinars. So anyways, I wanted to make sure that you realize that we also empower traders like you. There's just some imagery of me in and around the industry teaching traders that look a lot like you in various seminars, venues, industry conventions, and the like. We hope to see you at some of those venues as well. So it's important to realize that market profile, I think its perceptions of being only for professional users and it's too complicated for the everyday trader are grossly misconstrued. Market profile can and is for you, as you'll soon see, and it's not as difficult as you may have previously thought. There's some additional images of me and some other groups that I'm associated with, and I provide regular education. You can see, again, hundreds of people just like you pile into beautiful rooms out there in Walt Disney World to learn about market profile. There's me at the podium, again, doing what I do best, which is teaching traders how to be better traders using TAS Market Profile. Okay, let's get into some basics about market profile and why, for market profile lovers, it is the predominant and primary way to trade. First and foremost, I think it's to appreciate where market profile comes from. It's important for us to understand some of the other mechanisms and metrics that are out there and widely marketed and available to you as traders as well. So let's start in the top upper left of the screen. This is kind of a popular suite of let's call it a genre of technical analysis, and that is looking at bid-offer analysis. You may also call it order flow, okay? So bid-offer, as many of you know, is going to be trading off of information that comes in on your level 2, your depth of market, looking at bid limit orders, offer limit orders on a ladder, which provides you information on liquidity, order liquidity at certain places. So it's a proposal or negotiation that may or may not ultimately come to fruition. That's a good starting point. The next is what I like to call price action, and that's going to be that moment in time snapshot when a buyer and seller agree on price. It sounds a little bit like this. Cover your ears. Just like that. Price action, again, is like a Kodak moment for the market. That's going to show you the quotes that are available to you, and trading off of price action, it's important to realize, is a moment in time that has happened. It's over, done with, albeit factual. Again, it's going to be reacting to a moment in time. Next is volume. Now, how many of you use volume on the bottom of your charts? Probably the vast majority of you, right? In fact, most often when you bring up a chart, by default, you'll see volume in a bottom pane down below. Volume gives us a liquidity measure over a period of time, right? So the taller those histogram bars are on our volume, like little fingers at the bottom of our charts, tells us during which time periods on those price bars there's the greatest amount of liquidity. And then last but not least, at the bottom of the iceberg, where it's got the deepest and biggest breadth of information, is market profile. You'll see that at the very bottom. And that market profile, I like to say, gives a factual landscape of how much relative volume has aggregated over a period of time, and most importantly, at what specific prices. Now, this is really the big difference between those that simply rely upon volume by itself and market profile. Again, volume gives us a liquidity measure over a period of time. But remember, as traders, you don't get to just tell the market at a particular time you want to trade. You have to tell it and specify exactly at what price you want to trade, which, as you'll soon see when I give you some very tangible examples on my TradeStation charts a little later in the presentation, it is at what price that dictates that's the appropriate time to pursue a worthy entry into the marketplace. So let's get a little background here on where market profile comes from. Anybody comfortable with this curve right here? It's called the normal distribution curve. It's taught obviously in economics and in business schools all over the planet, and you may have encountered this in statistics and a whole bunch of other areas. But the normal distribution curve, for those of you that are seeing this for the first time, is a mechanism to aggregate data in a way that's meaningful for us to make a decision, is really what's at the core of it. And the kind of the meaty part in the middle that's highlighted in that green section represents 68.3%. We're going to call it 70% of all data points. So when we throw a bunch of data into a bucket, we want to find out where does approximately 70% of the outcomes land. And you'll see why this is important in just a moment, because when we're making a trading decision, we want to have awareness of where most of the data points fall, because that's going to guide some very powerful entries into the market you'll soon see. So the first standard deviation is highlighted by that middle section, followed by the second standard deviation, which represents about 12% of the data points on both sides, and then it continues on third standard deviation and beyond. As you get further and further away from that middle section of the bell-shaped curve, fewer and fewer of the outcomes are occurring, okay? When it comes to making a decision, whether it be trading or any aspect of your life, do you want to make intelligent decisions based upon an outlier or a less frequent recurring theme, or one that is a repeated majority of a time outcome? I think we'll all agree that we'd like to guide our decision making with predictable outcomes, and that's really what we seek as traders, and that's exactly what Market Profile does very effectively. So if you look at this here one step further, as a trader, we're ultimately trying to profile the market, appropriately named, right? We're looking to profile trading data. That's what we're trying to focus on. So this gives a nice example of what typically looks like what a volume chart might look like, right? So in the middle, that section where the most frequent buyers and sellers are agreeing on price, you can see the histogram bars are the tallest up there. So that's going to be where there's the most frequent recurring prices that are exchanged in the marketplace. Over there on the perimeters, on the left and right, you'll see that's the least occurring activity in the market, and again those histograms are going to be much shorter in length, giving us a quick, easy visual cue as to where there's the most amount of activity, correct? So basically when we plot prices this way, in this particular format, we're revealing the relative frequency of that volume and at which price, which is the very first step to determining probabilities in trading. The next, as you'll soon see, is how do we turn this into actionable information? So as you know on your price charts, where is our prices located? It's not located on the bottom horizontal bar, right? It's on the vertical axis. Okay, so in order for us to take that data, as you saw on the previous slide, and give us a meaningful reference point, we actually have to turn it and we have to flip it sideways so we can actually be pointing to, so we can see those tallest histogram bars are pointing to what price. And that's essentially what this slide aims to do. You can see in market terms, we're essentially using these standard deviations to determine where the market spends the most amount of time and where it spends, of course, the least amount of time. Another way of putting this is that we want to know where it accumulates and where it does not. In this diagram, you'll see that top red line represents what we call the upper band of the value area. Okay, this is that first standard deviation, all the way down to that bottom green line, which would be the bottom band of the balance area. We also call it the unfair low value area. Many people refer to it as the demand zone. So you have supply, the red line. The green line is demand, and in between is that first standard deviation, where again it's really important to realize that's where approximately 70% of the activity is occurring. Okay, so that's the area of value for buyers and sellers. When you get outside of those ranges, above the red or below the green, again you're moving into those lower standard deviations, fewer occurrences, fewer agreements between the buyer and seller are occurring, and again the predictability of an outcome is lessened the further away you go. So this is one of my favorite slides right here. If you've ever said to yourself, I'd love to learn this market profile, but I don't have enough time to read the big thick books that are out there. And there's some good books, by the way, so I'm not knocking that in the least bit. I'm a student of market profile first. I've read all the books, and this is the modern day interpretation. I'm showing you how TAS market profile and the market map have taken market profile back from the 1980s, and we've modernized it and we made it easier for you as a trader to digest right on your TradeStation platform. So this is called Anatomy of Market Profile. So I'm going to make this interactive for you here. Look at the chart over there on the left. Now you can see this is a dated chart by the look of the prices, given where we are here in historical highs in the market. But what I'm going to do is I'm going to say this is a 30-minute Acme bars, okay? We're showing each of those bars on that chart on the left represent a 30-minute period, okay? Open the whole range, high to low. I'm going to ask you, and don't cheat, by looking at that chart in that chart alone, at what price is the most frequent activity occurring? Is it 1066, 1067, 68, 69, 70? Go ahead and type it in the chat window. Okay, come on in. Type your guess. You can't claim victory if you don't. Okay, we got 71, 72, 74, 66. These are all great, valid guesses with that information that you have on the chart. Now, what we do when we move from left to right, the next chart over there, second from the left, is what we call TPO, time price opportunity, okay? And what we're doing with this in market profiles, we're assigning a letter to each of those time periods. So the first one is B, and followed by C, D, E, F, and so forth. And the reason we do that is we want to be able to reference and distinguish the difference between the first bar, second bar, third bar, and beyond. And you'll soon see why this is important as we then migrate over to the next and the third chart, which is what we call a collapsed TPO. And what we're doing with this is we're essentially, again, taking that chart data from the very left, we're assigning it a letter in chart 2, and then in number 3, we're going to take it and we're going to flush everything left. Why do we do that? Why do we push everything left? Because as you'll soon see as you look at the completed profile on the right, now, once we've stacked the blocks or stacked the Legos or whatever you want to think about, whatever analogy, now you have a relative gauge to be able to tell where there's the greatest amount of activity. So let's come back to my question. Okay, we posed this earlier, and everybody can see everybody's answers, I presume. Now let me ask you, what is the most popular price for buyers and sellers to agree on price? Looking at the chart on the right, I should see everybody get the right answer here. If you're a whole bunch of 1072s, that's fantastic. Exactly. See how quickly you were able to identify the correct answer, which is 1072, without having to do a bunch of writing, a bunch of squinting. This is the power of market profile. Isn't that amazing? How quickly, when we take data, which is originally derived, remember, in volume, and we extract it, we reformulate it, we flip it sideways, and now we can instantly, with our eyeballs as humans, determine that 1072 in this example is the most popular and frequently recurring price. Why is that so important to know that price? Because guess what? Markets gravitate to those value areas in fair auction zones. So here's what we did when we created Market Map way. This is not a new indicator, by the way. This is way back when. We created TAS Market Map, and we realized that what was most important was not the letters. In fact, many of you that maybe have some experience in the traditional market profile and the letter-based method know that it's not exactly very visually appealing to the eye, right? It's a little clumsy. It's not really, doesn't look nice on the chart, and it's tough to stare at all day long. So what we did is in our creation of the TAS market map, we realized it was not the letters that were important. It was being able to see the relative volume accumulation zones, and you could do that just fine without the letters. So instead, we generated a color-based method, okay? And this is a fact. You can look it up online if you want to fact-check me through the power of Google. The human brain recognizes colors significantly faster than the alphabet. In fact, if you go online, and I've done this before, you'll find many studies will say over 100 times faster. Why do you think that a stoplight has colors and it doesn't say stop, yield, go? Because the human eye can react more predictably, faster, and more accurately based on colors. So, makes good sense, since we're humans, we're looking at screens all day to make decisions, that we go with a color-based method. Not to mention, it just is darn visually appealing. So, the red color zone, which you see identified in this example chart, represents that value area. The red area is that 70% zone. That's where the vast majority of agreement on price is occurring. Notice what happens when the market is in those areas. Remember, buyers and sellers agreeing on price right there. So markets go sideways in those zones. Notice what happens when the market breaks outside of those red zones. Now the market is free to break higher. They move fast and vertically when they break outside of those areas. So for those of you that are breakout mode traders, how many of you? I love breakout mode trades. Think about how powerful it would be able to now know, with this laid over behind your price bars, exactly when you're about ready to break out of that 70% zone. You're breaking out of that value area. That's when you can expect the car to put the foot on the gas. It's like moving out of Chicago LA, New York City, San Francisco, pick a big city near you where the traffic is horrendous and about 3 o'clock in the afternoon. It's that part of the highway, predictably, that all of a sudden the traffic can move again. You can put your foot on the gas pedal. This is what happens time and time again with TAS Market Map. And it allows you to see it explicitly because it's uninvasively placed behind your price bars. So you don't have to keep looking down at your bottom volume gauge down at the bottom. This is uninvasively just as you see here listed on the chart right in front of you. Okay, so I want to talk to you about a couple of the more popular patterns. Okay, I want to show you two patterns that I think are going to be important for you to get to know if you go on to use our free TAS Market Map. My goodness, the price is right. I hope each and every one of you use it if you're not using it already. Some of you are current customers in here showing support. I appreciate it. So this one is what I call alligator jaws. Anybody from Florida, especially South Florida? Beautiful part of the country. Well, TradeStation's in Florida. Everyone at TradeStation better be jumping up and down. Okay, this is the one time that going alligator hunting is highly recommended. So alligator jaws is a pattern that provides a predictable outcome time and time again. And here's how it works, okay? I drew a little what looks like an alligator, a side profile of an alligator here, okay? So notice how we have a volume accumulation zone down at the bottom, okay? Market's going sideways for a period of time, and notice how that generates on the market map that red color, those red color lines that extend furthest to the right. Okay, now the market moves very fast and in breakout fashion higher. And then what happens up there? It starts to go sideways again. During that period, it's building what we call the top alligator jawline. What we're looking for with this pattern is for the market to actually pull right back down through the alligator's mouth. This is the one time and only time, and I don't want any lawsuits, that I recommend that you look for opportunities to get inside the open alligator's mouth. Okay, time and time again, we'll see the market predictably get to the 50% zone of that open alligator's mouth, and it's icing on the cake if it makes a retracement all the way back down to that bottom jawline. So what does this do for you? It helps you identify essentially a hole of volume very easily with your TAS market map. Okay, some of you are asking already, and I'm glad to clarify, what are those yellow lines? Okay, MPOC, that stands for Master Point of Control, and I'm glad you asked that before I got too far along in this presentation. So Master Point of Control, if you look within the area that I have highlighted as the top and bottom jawline with those white kind of rectangles, you'll notice that there's a yellow horizontal line that goes all the way across. That is the single price. When you look over to the right and you're looking at your price bar, where there's the greatest amount of volume accumulation. You can see there's one at the top, in the top jawline, and one at the bottom. And it's a very specific number. So this is an area that kind of like a magnet attracts the market. So the market gets attracted to the MPOC, Master Point of Control. And then when it breaks and creates a new one at the top, you have they're like two different magnetic forces in the marketplace, and the market wants to be near one or the other, and this is what becomes the driver of the opportunity to put on the short position as the market retreats from the one up above. Okay, so MPOC, I'm glad that you asked that question. Okay, the yellow line, you might have to, maybe it's not showing up especially well on this slide because it's a dark slide, but there is a yellow line that you can see. And when we bring up some charts in just a moment, because I'm going to go through some of your chart patterns at the end of this presentation, okay? I'll show you some examples, okay? Okay, this one is what I like to call train boxcar. All of these names, you're not going to find this in a market profile book. These are different analogies and references in your everyday life that I've created over the years to help you remember what to look for on these high probability chart patterns. This one's called train boxcar. Okay, now this shows 3 market maps back to back to back. Notice the red color zone is approximately in the same place. So I squared them off with a kind of a rectangle on each one. I even added some wheels there for you, so it looks like the side profile of a train boxcar on the track. So when we see this happen, we know that the accumulation zones have been derived in approximately the same place. You'll also see, and when we get into charts, you'll see this better, that yellow master point of control, that single price where there's the greatest amount of volume accumulation, agreement on price, they're all about the same place as well. What we tend to see happen time and time again here is the market will pull back towards the master point of control. So when the market attempts to retreat, they always come right back. Why? Because that's the most popular place of the playground. The market wants to be where there's liquidity. Now, by the way, this is important to note. When we talk about value areas in fair auctions, and again, that red zone there, okay, that 70% zone, this is the area that's widely believed to be where the commercial and institutional traders are trading. Why do you think that is? Because that's the area where there's the greatest amount of liquidity. They need liquidity to trade the size that the institutions do. How do we know? Because there are customers as well. Okay, I can't say their names, but some of the bigger banks that you probably hold accounts at may very well have technical trading departments that use our product. Again, I'm not going to list out a bunch of names here, but the product is used by the pros in that way. So they trade a little bit different than you as a retail trader. Well, while they're looking to execute trades inside these high liquidity zones, remember, we're talking about you as a retail trader being able to take full advantage of that and take advantage of it in a way where you can actually trade breakouts, knowing where those same areas are. So this is one of the few times that you as, call it the little guy, has the advantage, okay? So essentially what we're looking to do as traders is to identify these balance areas. That's really what it comes down to, okay? So we appropriately used red and green lines to delineate these balanced areas, okay? The top end of the balance area, the red line, supply area, the bottom being the green. So when markets stay within balance, okay, between the red and green lines, whatever that range may be, okay, the market is believed to be an expression of time dimension, meaning time is passing, but we're not making any progress, right? Sand is going through the hourglass, but the market is not going anywhere. In contrast to an imbalanced market, you'll see the chart on the right. An imbalanced market, you can't be in a balanced market and an imbalanced market at the same time, which is great. Because what we know about an imbalanced market is it's an expression of price dimension, meaning we're moving through price as time passes, but not solely just time alone without making progress either higher or lower. So really the success as a trader is dictated in your ability to accurately differentiate what type of market phase you're in. And I think that's a big difference between traders that are consistent in their approach and those that are using gut instinct, they're using intuition, they're using flipping a coin, a dartboard, all these other things that you might use to come up with an idea. A lot of traders already have a predisposition of what they're going to do in the market even before they turn down the chart. And they're going to trade the same way in any market no matter what, because maybe they've had some success in the past in that way. You'll find that those that are true market technicians of the market don't have preconceived notions about how they're going to trade each and every day. They let the market tell them what type of market conditions the market is in, and they adapt to the market. Now, doesn't that make more sense? Does anybody think that the market cares that you want to be a breakout mode trader, or you want to be a range-based trader, or you want to be a long-term trend following? Does anybody think the market cares? And if so, has it been your experience that the market does care? Probably not. It's not keeping tabs on your preferences, unfortunately, okay? And I can assure you that, being in these markets myself for nearly 2 decades, you are going to be better served to appreciate the market for what it is, turn on your computer each day, which should be your TradeStation platform, and digest what the market is, and it's your job to adapt to that. And if that means you don't trade on any given day because it's not your style, it's not the right market for your preferred style, hey, penny saved is a penny earned when it comes to trading, okay? That's okay. So what I want to do over the next several slides before we get into some of the live market stuff here is I want to introduce you here to also some of the other analytics that we've put together. Now, these are the ones that you'll find in our premium package, which includes 7 market profile tools. Instead of leave you to just using the TAS market map all by itself, which is a fantastic tool. Again, you can't beat the prices, totally free on the trading app. We also created explicit value area levels. We call it TAS boxes or dynamic profile, which actually puts that supply red line and that bottom green line right on your chart. So you can see we took that same chart here in this example, and now as you look at it, you can see explicitly when the market is breaking out above that red line. Okay, again, you're going to look for long positions when you're above that red line, and then you could use these same levels, okay, these same levels to guide your stops. A common stop loss strategy would be put the stop opposite of all three lines. We call that putting it across the highway. Why? Because highways are typically busy, so it's putting it across that volume congestion zone, which now you have explicit levels. So put it behind the bottom green line, and as new levels form, you can see you're going to stair step up your stop, and you're mitigating risk along the way. It really is everything from your entry, initial risk, in trailing stop, and exit plan, because when you close back in those levels, as you see in that there's two movements of the TAS boxes, those are great profit-taking zones as well. Okay. We also took it one step further, which is, and you'll see this on the charts. I'm actually looking at it. If you're looking at my webcam right now, right there, we also created a product that made it easier to see when you're bullish, bearish, or neutral. So what we did is we created an indicator called TAS Vega, and instead of letting the traditional coloring of price bars be dictated by whether the bar closed net up or net down, we said let's make this meaningful to being bullish out of balance. So we made it bright green. So we take over with TAS Vega your traditional coloring of your price bars. We make it bright green when you're bullish and above those value areas, bright red when you're bearish, gray when you're in the middle, and we even added an extra color which is orange or yellowish depending on your settings when you are at a first bar close right back inside the value area. Okay, so look at the market clarity on this one. I'm going to go back to the previous slide, because if you blinked, this is what a traditional your coloring would be: green when it closes up, red when it closes down. Now look at the chart. Now I'm going to look at the clarity. It's not rocket science, but it's based around TAS market profile, and it adds that little bit of extra clarity so you know what to do. Now on to TAS Navigator. This is one of my favorite utilities. This is like a pendulum and tide gauge tool. Now what I mean by that is this is going to gauge whether you're overbought, oversold, and kind of where you are in the bullish bearish pendulum, because that can only swing so far one direction or the other. Okay, so what this does is trajectory shifts higher in that bottom. It looks like MACD, but everything in terms of color there means something, okay? So upward pointing trajectory, we're bullish. Notice these pink magenta color bars. When those appear, we call those trend exhaustion warnings. That's a good time to look at your stop. Make sure you're tightening up the stop and managing risk behind the trade. And then here we go, downward pointing trajectory. Markets are likely to be having some selling and bearish pressure. You're going to want to look to pursue in conjunction with closes down below our demand area, remember? And you put it all together and you start to get together some multi-indicator and multi-confluence high probability signals. That's what you're after. And then here's some additional indicators as well, which I'm not going to spend a lot of time on today. We do have some tools called price compression levels, okay, which is PCLs, and they give basically 3 levels of support and resistance based upon market profile and our volume analytics, which is great. To start the day, you can see 3 levels of resistance above, 3 down below. It's fantastic, and it's an important part of how I generate targets throughout the course of my day. Then we also have one that's an oscillator-esque, which gives overbought, oversold conditions, as well as really nice counter trend trades if that's your trading style. It's called TAS ratio. Okay. So let's take a peek at some charts. I'm going to move over into my screen share, but before I do, I thought if you're like me, hearing somebody else tell you about the product that they've used as a customer means a lot more than me as president and founder of the company telling you. So I'm going to play just a very brief, this thing, I kid you not, is 2 minutes long. I hope you enjoy it, and I'll be right back. We're going to look at some live markets. Get ready to tell me some tickers you want to take a look at. Okay, let's get to the good stuff. For those of you that were able to hear the video, you heard it from many of our loyal customers. For those of you that were not able to hear the video, you get the idea even from the visuals, and obviously you can find that video over on our website. So let's dive into some live markets. I've got screen share up. I've got, of course, our beloved TradeStation. This is where I wanted to show you. This is where I earn your confidence in no uncertain terms, and this is where I let you really dictate the pace. So if you've got a ticker or two that you want me to bring up, this happens to be the E-mini S&P 10-minute time frame, and let's just kind of talk through some of the examples here, okay? I'm going to show you what this worked. Remember, we talked about the value areas that are revealed by market map. So I'm going to use this to kind of outline what your market map would look like on a 30-minute chart of the E-mini S&P, okay? I'm just outlining it here. You can make it thicker so it's less transparent. You can make it more transparent. I have 3 of them added to my chart. If you just want one big one that goes back 200 bars, you control that. And that's one of the primary benefits of this tool. Unlike a lot of other market profile utilities that are out there, you don't have quite the same flexibility beyond even the visual appeal of this product. You can dictate where it starts, right here, where it stops, whether you have 1, 2, 3, whatever be the case. 3 is a very common amount, but let's talk through this chart here for just a moment. Okay, so here's our value area. I'm going to square it off right here, and what I like to do is I like to, in combination, pay attention to when we're breaking out below that congestion in this case, but also in this case, if you're using the TAS boxes indicator and the 7 indicator premium package, you can see you want to be short, 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 short. When the market moves back inside the balance area, where are we going to put our stop? Trail it down. I call this the slinky trailing stop. Along the way, there's different places you can scale out of the trade, okay, different places, and that's when you close inside these new value areas, here, here, and what would happen right there? You get stopped out right there eventually. That's okay. Getting stopped out for a profit, that's the name of the game. You gave the market a chance to continue to move in your favor, but as the tide's returning, you get stopped out. So let's look at this trade. So this one right here, what are we going to do here on this bar or this bar right here? Either would be just fine. You are breaking out. You're trading long. And the first thing you're doing, and we teach this to the prop trading groups all over the world when we teach them how to use this method, you're eliminating thinking about a short side trade. You now are in bullish state of mind the entire rest of the trade, well, until, of course, we get a little further along in the chart and we see some things changing. So bullish only, long only. You're not thinking about a short side trade. So think about what you've done there. You've effectively eliminated one side of the market. Now you're just focused on whether this is within your risk tolerance. Okay, this is exactly where you want to focus your energies. Long only, and then you're considering, where do I put the stop? Where do I want to put the stop on this? There's different choices that you have. You don't always have to put it across all 3 levels. Sometimes if the risk is too large to do just that, because these do expand top to bottom, which is a measure of volatility, the taller the distance between the red line and the green line, supply and demand zone, the more volatile the market. You can pick putting it outside the middle line as well, but you trail it up. The stop goes up, 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 and there you go. Your worst case is you get stopped out there, but not before you made that move. Now let's look at a loser. Okay, now nobody likes to do this. This is why a lot of other presenters you may have encountered don't like to show live markets. They're afraid what that product's going to look like when they bring up a chart. So here's a loser. Okay, so this is short. Okay, short side trade, right? So you hit the sell button, you put your stop up here because that's the explicit place that if the market starts going up there, we don't want to be short anymore, and look what happens. The market fails to break down here where we had hoped, and instead we break back to the upside. This is where you not only get out of your short, but what are we going to do on that bar? We're breaking above that supply area, we're moving out of that 70% zone, we're out of the value area, and we are, I say get your bullhorns out just like this, you're long. Okay, so I just showed you a loser. You're like, oh my gosh, what kind of presenter is this? He's showing losers. Okay, now you're long. It's okay. They don't call it winning for a reason. Okay, because it's trading. So here you get long. Okay, long, we put our stop down here. It's not a bad idea to consider putting it down below technical lows as well, and then trail it up as new levels form. Okay, you also can be more aggressive moving vertically up here, and then you're going to move it up, and you're going to be out of that trade, and that's a monster trade, obviously, in the S&P. Okay, now you get the market that's spending a great deal of time in this value area, okay? So we can see today's sell-off action this afternoon was consistent with the signal that was generated back here in that 29.32 area. You could see the market's got about 4 or 5 points at the time of this, and there's a lot of room down here. Without TAS market map, you can't see that this is a fantastic, at least on this time frame, opportunity to be continuing to pay attention to some bearish opportunities, okay? Let's bring up CRM. That's coming in on the chat, okay? All right. You can do this on any market, any time frame. Who was asking for CRM? Vada? Here you go, Vada. Would you have liked to be using your TAS market map to identify this trade, this trade, this trade, and this one? Because by my count, that's 4 in a row. That is not a Vada does not work on my team, I promise you. Okay, so this is the power of TAS Market Profile. This is my favorite part of any webinar, okay, because this is not rehearsed. I can bring up any ticker, any time frame, any financial market. By the way, this works on stocks, ETFs, commodity futures. If you do Forex as well, of course, it'll work there. But what you're paying attention to is the overall picture. So if you're using all of the analytics here, okay, not just market map, you're going to get some great signals with TAS market map, make no mistake about it. But you also get some fantastic cues like this one, pink magenta color warning bar there. This means markets reaching peaking conditions and we're reaching trend exhaustion. So we start getting into that, gearing up for the short side. Look down here. We get it here on the short side move as well. We start getting this early warning that things are not likely to continue at that plummet pace. We get it here. We start getting that warning as the market starts reaching those peaking conditions so you can start to prepare. Remember what I said you do? When you see that, trail that stop real nice and tight because the market's gearing up for a tide shift. Beautiful thing. Type some more tickers over there as well. Okay. Good. Okay, let me type in some more. Crude oil, let's do it. All right, this is for NEO. Okay, let's bring up the June. Oops, no, let me just do, I'll do continuous here to make it easy here. There you go. Here you go. Again, you can visually see, and what I have on the chart, by the way, just so you're clear on what this is, if you've got market map, that's the one that's totally free. All you got to do is go over to the TradeStation Trading App Store and request it. Type TAS Market Profile. You'll see it's totally free and available to you. But man, look at that breakout to the upside here. This is your TAS Vega green color bars. That's in the premium package. But look, you can visually see when you're in that market map. You expect the market to go sideways when you're in those volume congestion zones. Okay. Eventually, there's a final leg higher. Here you go. Here's a short-lived short side trade. Now we're going long, short. Again, some of these trades are not always going to be big, huge trades. This is what TAS helps you to do. It helps you to add a framework, a blueprint behind your trading decisions so you know when it's time to eliminate one side of the market and focus on the other. So what side of the market, as we look over here on the hard right edge of crude oil, this is a 30-minute time frame. What side of the market should you be thinking about some opportunities if you are trading crude oil? Short side, right? And you could use these levels for your stop. And you could use this as your stop and this. So you have choices. You move vertically amongst these ladder of levels. These are all based soundly in market profile with our proprietary TAS algorithms and intelligence. Okay, but you can visually see, look at how through market map, even all by itself, you could see we are just about to maybe break down below that congestion zone. If we stay down there, guess what? Look out below crude. Okay, look out below. Let's bring up another one here, okay? I'm just giving you example after example here. This is how I earn your confidence, okay? Here we go. AMD coming right up. Here's AMD. We could change the time frame too if you want to look at, I don't know if you're big picture, here's a daily. There you go. We could also, let's bring up, I don't know, 5-minute chart just so you can kind of see. Here you go. Here's the 5-minute chart. If you're a short-term day trader, okay, how many of you are day traders? Very popular for day traders. Let's draw the broad sweeping strokes. We don't have to go all the way back here. Let's just start here. Up, 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 up. Again, look at the clarity. Green bar, green bar, green bar. Bullish, bullish, bullish. And you visually can see that you have broken outside of the TAS market map congestion zone right here early on in the trade. Now remember, trail the stop up. Here you go. Trail it up. Your worst case is what? You're going to get stopped out as that market emerges back down over here. Big deal. Big deal. But you got a nice trade, okay? Now let's take a look here. Here's your small loser. Look at short. So put a big S here right on that bar. But you know to get out. It's time to get out right there. So do you see how I'm not over here promoting unrealistic expectations? I'm showing you losers. And here's the power of the levels. The same levels that are going to help you to eliminate the low probability side of the market are the same levels that when it's wrong, and I don't view it like the product's wrong, the market had a change of direction. Those are going to tell you when it's time to call it quits. Okay, and if you have difficulty getting out, of the trade because you don't want to take a loss, TAS will help you to not take these markets personally and know when it's time to get out of the trade and it's time to pack it in. So here you go. You get out of the short trade. Now what side of the market do you go? Long. And then you get short. Do you see how this works? We're eliminating one side of the market, focusing on the high probability market profile side of the market. We're generating your job as a trader ends up being a risk manager for your own trading capital, presumably. And your biggest decision is this. When you go back here and you look at this long signal, you know you should be trading the long side, and you're going to consider, can I afford that risk to put that stop down below that green dotted line? If the answer is yes, all systems go. Make sure, of course, you have proper margin. Otherwise, you're going to get a call from your friendly TradeStation broker. Let's do another one here so you get the idea. Okay, here we go. What's another one that you like here? Facebook, sure. Here's Facebook. This is the 5-minute time horizon. If you have a particular time horizon you want to look at, let's look at one we haven't looked at. How about 15-minute chart? You guys can see in the chat, these aren't my tickers, these are yours. I'm just picking random time frames just to show you how quickly the analytics adapt and give you the analysis for whatever market time frame you want to trade. You're not, some tools out there are you can only trade the E-mini S&P and you have to trade a 1.5-minute chart. You're kind of pigeonholed. You're not pigeonholed. You can trade whatever markets you want. So let's take a look at this one. This is Facebook on 15-minute time horizon. Let me go up here, grab my big broad sweeping strokes. Here you go. Here you go. Short-lived trade on the short side, back on the long side. Short, again, trail on the stop down. That's it. It's your entire trading plan on every trade. Again, you're using this, right, to dictate kind of where that momentum is swinging, bullish, bearish, and when we're getting overextended. In the trading course, we talk a little bit about, by the way, again, that course is free if you use the TAS market map and you post an honest review, whatever that may be. We're willing to take our chances that it's going to be a darn good one, like all the other 5-star reviews, okay? We talk a little bit about these metrics over here on Navigator and how you can use those to determine when the market is likely to be running out of steam and your highest probability trade and outcome is going to be coming back the other way. Let me do a little that platinum, July platinum. Okay, let's take a look. All right, let me just I'm going to do continuous to save time here. And remember, you can pick any time frame as well. Now, one of your favorite questions should be, if you're not thinking about it, is, does this stuff work on tick-based charts? Yes. Does it work on range-based charts? Yep. Does it work on Renko? You bet it does. How about case? Any style chart virtually, you can apply this analytics. Talk about flexibility. So here we are. We're looking at platinum as well, and I don't know. Let's bring up just some different time horizons over here. We can do big picture if you want. Here's daily. There's daily big picture. Here, as you're looking at this, and this might be a little bit of sensory overload. If you're seeing this for the first time, I know when I first got the glimpse of the very first versions of this product, I kind of was just staring at it and I was just in awe of it because it's so darn pretty to look at, if nothing else. But once you get to understand what's going on in these different zones, and that's our job. There's a real nice manual, by the way, in the trading app store right here. These areas where you get into blue and they kind of fall off, though, those are called rejection tails. Okay, these are areas where there's very little institutional volume, mostly retail volume, and markets do exactly as you see. They get scared in those areas and they come right back to none other than those value area fair auctions. Now, notice this one here. Look at the red zone. Is got a very tall distribution top to bottom. That means the market, again, the value area has spanned a wide range of prices. Market can move very freely up and down in those prices. And look what you see, these big, huge swings in the market. So you can gear up for exactly that type of activity. Wouldn't that be powerful to know every time you trade before you get into the market? Sometimes traders say one of the biggest benefits that the market map has is it helps them to know when it's not conducive for their trading style, which is great. We want to help you to only trade the markets and the conditions that are best suitable for you. Okay, let's look at another one here. Okay, all right. Here's your soybeans. Oops, so hold on a second. Here's your soybeans. Let me bring up 30-minute. Okay, here's 30-minute chart, and you can see it's been a steady grind lower as of late anyway, and starting most recently back here, right? Down, and then when we're in value area, We're staying and trailing our stop behind the trade. You can see how it goes. Again, you're just trailing it with a little buffer behind the level. You don't put it one tick behind the level. You got to be realistic. Give it a little smidge outside that supply area, but you're going to deploy the trailing stop, the slinky trailing stop. Look at the market clarity again in your TAS Vega. Beautiful. Again, red bar, red bar, red bar. Don't even think about getting long during those red bars. And that's what I tell traders. I say, look, if you're hitting the buy button and getting long on your market and time frame and you're staring at red color bars, slap on the wrist. Okay? Get your ruler out, slap yourself on the wrist. You're breaking the rules. You don't get long in a market that's below the value area, out of balance bearish, and you're staring at bearish TAS Vega bars. Okay? You're breaking the rules. And, well, you might get lucky sometimes. Most of the time, data has a way of being the great equalizer. The more trades you log and you take action in that way, there's always a price to be paid. Okay, let's look at another one here, okay. Bonds, okay, here you go. Oops, hold on a second. Here you go. Here's 30-year bonds. Anybody interested in this chart by a show of hands? Anybody know what side of the market you should be trading on as of, well, let's go back here. Oops, the most recent one is right here. That would be, yesterday morning. Since 8:30 yesterday morning. Anybody interested being long at 146.11? Because that's when the bullish breakout mode signal occurred. And look at the path. Okay, so long as you close above your top supply area, you no longer are thinking about that short position. That one's over. You are long. As the market goes sideways, you get these gray color bars. That's Vega again. You're taking that stop, which starts down here, trailing it behind the levels. Trail it behind the levels. You can even move it up in the levels here, because you see how this all held here? That's wise to do. Move it up. Use these levels as your risk management plan. You get the idea. I could go on and on. I could run an 8-hour webinar if TradeStation would let me do that. But that's really what it's all about. I hope by now you can see the power of not only TAS Market Map, but I do hope you consider also looking at the 7-indicator suite that's in there called the Immersion Plan. I'm going to get back to showing you exactly how much the TAS Market Map costs. $0. All you got to do, as I showed you in the onset of this presentation, is come on over to TradeStation Trading App Store, search TAS Market Profile, and you'll see two products. The free one will cost you exactly $0. If you want to unlock the free Market Profile course, which is an hour and a half long of very, very good information to set the foundation for further learning, it'll be available to you totally free just by submitting a review on the Trading App Store, and an honest review at that. If you don't like the product, we prefer you tell us, but if you have to tell the world, by all means do it, okay? Appreciate you spending some time with me here today. If you'd like to reach out, before you do, want you to understand where you are in the process. You've completed step 1. You can see it right here. This webinar, you learned a little bit about TAS Market Profile and the power of Market Profile. Step 2, as I told you, is come on over to the Trading App Store and get your free market map. Unlock your free course is step 3, and then keep on learning. All of our information, most of it I should say, is totally free. Live market streams, live market webinars, video education, it's available over on our website. You can also check out our website dedicated solely to the indicators, which is marketprofileindicators.com. If you got questions, reach out to my team by simply creating a support case by emailing help@tasmarketprofile.com. You can see I'm not sitting in my in the office today. I'm sitting in my satellite office today. But you can send an email to us at help@tasmarketprofile.com. I hope you learned something today. We'd love to have you as a client. If you choose to continue learning, by all means, that's a choice as well, and we wish you the very best in your trading. Until I meet you back here at TradeStation at an upcoming event, trade well and be well, everybody. And I'm going to hand the reins back over to Mike. It's all yours.
Thanks so much, Steve. That was great. Thanks, everybody, for joining us, and keep an eye on our calendar for more great upcoming events. Have a great evening, and good luck in your trading. Thanks again, Steve.